Hey, what's up, good people? How you doing? Welcome to Stock Up with Larry Jones. Hey, if you are new to the page, take a second right now and follow that prompter in your lower right-hand corner by hitting that like, subscribe, and notification bell if you're not already subscribed. If you are, please continue to hit the like button. I'm going to talk about something very important today. But before that, please do not fall for any spam in the comment section. I don't manage anybody's money, don't have a WhatsApp, I don't have a Twitter. So don't fall for any spam. Don't fall for anything talking about AMZT or AMZ, anything. And lastly, anything I say is not a suggestion for you to buy, hold, or sell. Have to get all that legal out of the way. And then at the end of this video, I want you to check out my links below. Let's talk about something that's very important. All right, good people. What I want to talk about today is investing and how we had a run up in the last 2 years, 2020. We know COVID happened. There were millions and millions of new accounts open. The Fed gave us all of this free money. A lot of younger people started to invest with this money, and now they are getting out. Let me show you guys this. Forgive this, I shot it with my phone, but it's very important, right? So as we could see, you see here it says millennials take profits and run. That's a misprint. They didn't take profits and run. They just got out of the market. Some took profits and run. A lot of them lost money and just got out of the market. So let me correct that right away. As you could see, right, the younger they are, the more they fled the market. This is very important, all right? Let's just stick a pin in this. The younger they are, the more they fled the market. Let me get a good window here. This is fine. All right. So the younger they are, the more they fled the market. Let me correct that. All right. That's not good, good people. It's not good because we do know that time in the market will always outperform trying to time the market. As you can see, boomers, baby boomers, which are the older in this demographics, 13%, Gen Z, 17%, Gen X, 21%, and millennials are 49%. So you could see the correlation. The younger the investor, the more they fled and took. It says millennials most likely to have sold investments, right? And so, listen, between the boomers and the millennials took out way more. So you could see the age correlation. This should absolutely be the polar opposite way around. It really should. Now, who do you think has the most knowledge or have been in investing longer? The boomers have, not the millennials. But in the last 2 years, the millennials flooded the market. The boomers have been, some of these boomers have been investing since the 70s, all right, and the 80s, right? So the boomers got in the 80s. A lot of them got in the 80s. They got in the last 2 years. So you guys see this, right? The lower you go in age, the more you most likely have sold. Now, that's very important. I wanted you guys to see that because that is a sign that we just don't get this. I wanted to bring this up because for those of you that are older or have been in the market for more than the last 2 years, I need you to get this information to your sons, your daughters, your nieces, your nephews, your cousin them, Boo-Boo, Day-Day them, Tyrone, Laquan, all of them, okay? Odell, we just need this information to get out. I'm joking, but I'm not, because we have to get serious about building generational wealth. Let me show you this, right? Let's go back to the chart. I like using this chart because it's just easier to see, I know, everybody else uses the candlestick. I just like to be a little different. Let's go 1 year. So if you go 1 year, you can see there's been a sell-off, right? If you go to last 6 months, sell-off, right? If you go year to date, sell-off. I can guarantee you this is when most of the millennials have taken their money out, was this year. But if you go back 5 years, what do you see? You see an increase. And I'm using the S&P, right? But we can add the Dow. I just wanted to see. You see that? Same deal. We could add NASDAQ. Same deal. You guys see that? All right, 5 years, same deal. All right, so let's just take these out so we don't confuse it. Okay, so let's go back to the S&P and let's just go out max. Right, look at that. Just a steady incline. Right, and so what I want to do and what I want to accomplish in this video is very simple. You know, I'm not a complicated guy. I break everything down. What I want to show you guys is that it's easy to invest. I'm going to say that again. Investing is easy. Trading is a little complicated. Investing is easy because all you have to do is find good companies. Just start with some ETFs, VTI, VOO, and just do that. And just invest. Just continue to invest all through. And what I want to show you is, I got my iPad here. I want to show you is, this is dollar cost averaging. Now, this is the stock market, right? So now all I'm doing, for those of you that don't know, is I'm taking something like this and I'm blowing it up, all right? So let's just say I'm blowing it up, all right? So I'm just taking, as you can see, you got the highs and the lows and the highs and the lows and the highs and the lows. So all I'm doing here is just accentuating it, okay? But what you want to do is you want to buy every day. What happens is there are a lot of millennials that will hear about a bull run and they'll buy here at the top. And then they sell at the bottom. Then they buy at the top. And then they lose all their money. They sell at the bottom. And then they hear, oh, I get out of the market. And then 2 more years, here we go. It's 2024. There's another bull run. And then you hear about it. And then you buy at the top. And then it loses money. And you sell at the bottom. When in reality, you should just be dollar cost averaging long term. And I'm talking about long term investing. And so what you want to do is simply buy every day. You're going to buy every day. When you buy every day, actually, this is what you're doing. You just keep buying when I mean by every day, I don't mean literally every day. I mean, when you get paid, when you get your allowance, millennials, when you get paid weekly, bi-weekly, all right? Oh, I'm sorry, weekly, bi-monthly, or monthly. Whenever you get paid, you just continue to dollar cost average. This is what you want to do. And yes, sometimes, let me draw another one. Let me draw another one right here. All right. Sometimes you're going to be buying at a high. Sometimes you're going to be buying at a low. Sometimes you're going to be buying at a high. But overall, this is what you're going to do. You're going to dollar cost average right through the middle. It's the only way to assure, since no one can time the top or the bottom, it's the only way to assure that you're getting the best price. And so in all of this trading, I guarantee you that the masses will be back to the market when they hear from their cousins, neighbors, nephews, sisters, barber, or beautician, that this stock is hot or the market is back. And what happens is you miss the lows by not dollar cost averaging. And so it's easy. Consume the stuff that you consume, or should I say, buy the stock of the product that you consume daily. If you don't know how to pick a stock, continue to watch pages like mine and other pages that suggest good stock. And if you really want good companies, it's not that difficult. We know that if you're going to continue to use an iPhone, then you should be buying some Apple. If you're going to continue to buy Jordans, then buy some Nike stock. It's as simple as that. Buy, if you hate Apple, buy Microsoft. Consume, or should I say, purchase the companies of the products that you consume. This is what you should do. First, those companies are not going anywhere. Microsoft is not going anywhere. Even Facebook, with the beating that it's been taking, it's not going anywhere. Meta's not going anywhere. Microsoft, Google, Apple, these companies are not going anywhere. And then you have chips. So buy the products that manufacture the products. AMD is not going anywhere. NVIDIA is not going anywhere. 3D processing. Tesla's not going anywhere. Ford and GM is not going anywhere. So just start to consume some of these companies that have a proven track record first. And I would say long term, over 5 to 10 years, make those your biggest purchases and buy the overall market by buying VTI and VOO. This is what you should start your children with, or if you are older, and show them that chart at the beginning of this, because they're doing the polar opposite, right? They are selling fear and buying greed, and you should be doing the polar opposite. So if we truly want to build generational wealth, we have to show the millennials the way now. As a matter of fact, I'm going to say something really bold. The millennials literally have time to be even more riskier plays because they have more time. And so, yes, have them into the Microsofts and the Apples and the Googles and all of that, and the Amazons. Have them into those stock, but then give them a little risk, okay? Give them disruptive technology. Give them a little of that because they have more time to recoup, over the older investors, okay? So I just wanted to bring that out. When I saw that chart, I just shook my head because it's disturbing, because we have to understand that we have to buy fear and sell greed. Warren Buffett, we got to be brave when others are greedy, but when others are, and then we have to be, and vice versa, okay? So it means the same thing. Be brave when others are greedy, and be brave when others are fearful, all right? I'm paraphrasing. And be fearful when others are greedy, all right? And that's what we want to do. That's what I wanted to share with you guys. If this has helped you any, leave me a comment. We got to get serious about our long-term investing. It's totally different than swing trading and day trading. And I believe in making money in all areas and not just one. But the truth is, out of all the day trading, out of all the swing trading that you do, and I've made a lot of money swing trading and even day trading. I've made a lot of money, mostly swing trading. But the truth of the matter is, I'm going to make way more investing, especially with an upcoming hard recession. We are already in a recession. Make sure you check out the 2 links below, mainly Moo right now, because that's where we're cashing up, getting ready for the hard recession. Deposit that. They got up to 15 stock now, the most aggressive promotion they've had. And then also open up a Webull account, which I have a link below for that. Do it for your kids today and just set it and forget it. They got fractional shares, reoccurring fractional shares. You set it once and you don't have to worry about your purchases, okay? I'll talk to you guys later. Live, love, laugh, and learn.